In this video, I will show you how one supply zone trading setup flipped my entire trading week. I was down 5% from the uncertainty in the market caused by Trump's tariffs. Then this USDCAD short appeared, and I will be walking you through the top-down analysis, the exact trade setup, and how sticking to risk-to-reward principles turned the drawdown around. You will see how the higher time frame structure aligned perfectly with this trade and how I managed my position all the way down to a 5-to-1 risk-to-reward. Why is this kind of setup the foundation of our trading system? Because it works so well. This is the trading system that myself and several members of my group have found real success within the markets. So like I was saying, I was in a 5% drawdown. We've seen the US dollar really start to tank, causing some of the pairs. If you look over here at the Aussie US dollar, look at the manipulation that we have seen here, right? This is a daily chart, remember guys. So massive daily candle down. That's a huge move down, followed by a move back, right back up to where we started. So this right here is what I like to call manipulation, probably targeting some sort of liquidity. I'm just saying with crazy moves like this, we will see supply and demand zones and other technical analysis really not work the best in those market conditions. So just remember that as you are trading, it is completely normal. I went through a 5% drawdown, one of my worst ones I think I could say as far as recently, and I was telling the members I'm not going to change anything up. I'm going to continue to trade the way that I trade and that we always trade. So we are continuing to look for setups. Yes, I took 5 losses. I probably could have gotten rid of some of those losses by pulling some orders based off of the Trump announcements coming. That's my own fault. I never like to blame one person or anything. But we continue to trade. Some of the members in the group said, I'm not trading during this market condition, and that is fine. I personally was still looking for trades. So the trade we took was on the USDCAD, and why I'm bringing this up, like the secret to trading, guys, is having a good risk to reward. You can definitely be profitable trading with a 1-to-1, 2-to-1, but when you have a risk to reward of like 5-to-1, you can lose 5 trades in a row, and this sequence of losing trades could make you feel like, wow, this strategy sucks. And then all of a sudden, guys, we get a great trade like this, and boom, we are back in business. Am I up? No, I'm technically break even based off my 5% drawdown because my 5-to-1 take profit was hit, but I made up for all of those losses, and that is why having a risk reward is key. Some people, they don't know when they take profit too early, and I'm going to explain in this video why we didn't take profit too early on this trade. So this is the USDCAD 4-hour time frame. There's more to it than just the 4-hour time frame though. We use multiple time frame analysis. So on a 4-hour chart, our higher time frame is typically the weekly time frame, and we also will use the daily chart. So we took a 4-hour supply zone short, but if you look at the weekly time frame, the trends are up, right? Indicated by this arrow here. The trends are certainly up. Now, the trend was up, so it is technically a counter trend trade based off of this weekly time frame, but I noticed a lot of weakness here, pulled up, started to fall back down again. So I noticed some weakness, and just because the weekly trend is up doesn't mean we can't get some counter trend moves, right? Okay, most of the money is made on the way up, but there's also some money to be made on the way down, right? You can see it every now and then. There are some ways to make money on the way down. I always prefer trading with the trend though. I will just clarify that. But we have tons of profit margins to the downside. That's another factor here, the profit margin. So if we're entering on an H4 time frame, we are looking at the weekly and the daily chart for trend and for profit margin. I didn't notice any areas of demand in here. The nearest area of demand is down below at 1.357. Now, I'm not saying we can just go to this demand zone, no problem. I'm not saying we won't get some choppiness before we hit the demand. I'm just saying ultimately this is our profit target. And obviously I didn't take profit here, but I'm just saying this is our profit margin. I didn't want to hold the trade this long, right? Because it's probably going to be muddy waters here before we end up hitting it, but we can continue to take trades with this as our profit target. And so what we're viewing is where price is at now, down to this demand zone. This right here is our profit margin. That's what we view as our profit margin. So there was profit margin on the weekly time frame. That is not why I took the trade though. Basically, what happened here, so we'll look at the zone first. The move away is fantastic. This is something I talk about quite a bit in basically all my videos, all my forecasts. Make sure you guys hit that like button and subscribe too, by the way. I do weekly Forex forecasts every single Saturday if you need help finding zones and trading. So check out that forecast every Saturday. Make sure to subscribe. So I talk about this a lot, this massive move away. Compare this move away here to this move away, right? Compare these two candles. Let's zoom in and look at the difference. I would say they're two pretty clean candles, but look at this candle and look at this candle. The difference between, look at these groups of candles as well. Look at the difference. This is a massive move away. These are all basing candles, right? This is right here is like a mediocre move away. This is a fantastic move away. When I'm looking for a supply and demand zone, this is exactly what I'm looking for. And you'll notice I have very similar types of zones in my charts, right? The great moves away, boom, great move away right there. Another great move away right there. That is what we are looking for when trading supply and demand zones to find, the best zones. So when I saw that zone, just based on the move away, it looked really good. Now, what I did not like about this zone is the basing, right? So if you look here, the basing is really weird. Let me just remove this first. Look at this, right? It's not the best basing. We have a huge wick up here. Some people might have wanted to, maybe draw the zone something like this and ignore that wick. And you could have done that, but then you would have been stopped up. So I decided to draw it like this, right? Something like that, where I am using this wick as the top of the basing as far as the distal line goes, and then the proximal line was right up against these basing candles. You could have done it like this too, drawn it a little bit bigger, but that would have just made your risk reward worse. That's why I tightened it up like that, because this, in my opinion, this is where that massive move happened. So that's why I wanted to short the pullback right there, which is what we did. So as far as the move away goes, I would give this move away like a 9 out of 10. It could be better, but it's like it's completely fine. So the move away was, I would say, a 9 out of 10. The basing, not the best. I would give the basing a very poor score. So if there's like, bad, mid, and like great, I would give the basing here, I would give it bad basing. I would give the move away great though. So there's two different factors here. I'm not going to take a trade. I'm not going to not take a trade based on the basing. I'm not going to take a trade because the basing looks great either. And you look here, this is from the supply and demand course PDF that comes with the membership. These are two examples of good basing and bad basing. Obviously, we would like to see the good basing, but even sometimes the bad basing, the trades work out as well. And the reason I think why this trade worked out is because of the great move away. There was tons of supply here. This indicates a massive area of supply is up here. Now, that is the 4-hour time frame. Also, the 4-hour chart was trending down. We removed this low here, and then the 4-hour chart was trending down. So it was with our entry time frame trend. Remember, this is our entry time frame, the 4-hour time frame. So that's another thing we had going for us as well. And then on the daily chart, right now you can see this is a daily downward trend line, a daily downward trend. It's a picture perfect downward trend. It was not a downward trend when that zone was created. Oh, sorry, maybe that's worded wrong. But basically, I'm going to draw a line right here. And what this line indicates, this is a daily chart. Remember, this is our higher time frame, okay? We are looking at our higher time frame now. And that with supply and demand, we use multiple time frame analysis. So looking at this daily chart here, if you just ignore all this, this was not a downtrend at that time, right? The reason was because we did not break this low. So there was no lower low to give us that trend or trend line. So there was no trend here. And if I sync this line, right? So if you go in your charts and we sync it in layout, now we're going to go over to our entry time frame, which is the 4-hour chart. So this is that low I was talking about on the daily chart. And then what I notice is if this low gets removed, that gives us a daily downward trend. And what does that mean? Well, it means that any shorts, on lower time frames, a 4-hour chart, for example, would be higher odds because you're trading with the trend. And not only that, it could also give you a higher risk reward. I tell the people all the time, if you're trading with the trend, you can look for big risk rewards like 5-to-1, 6-to-1. This trade could really keep going. When you're trading with the trends on the higher time frame and on your entry time frame, you can go for bigger risk rewards. Let's say this was a counter trend setup and this is a 4-hour short that we took, but the daily trend is actually up. Well, you could have still taken this trade because, it did remove demand. That's another thing I forgot to mention. We are looking for demand zones to be removed to create supply zones. That is what we are looking for to give us extra confidence in the zone. So that they could have removed the zone, could have been great, but it could have been counter trend. So at that point, what I tell people to do is maybe get more aggressive with your risk reward. So maybe only look for a 1-to-1 or a 2-to-1, or maybe you want to target the 5-to-1, but then you put your stop loss to break even as soon as you can. And actually, you would have been stopped out of break even before price went to 5-to-1. So that's where it wouldn't really have worked out all that good. So, this trade worked out phenomenally. I'll explain later my trade management and how I managed my trade here. But going back to this line, a break of this line by 1 pip indicates a higher time frame daily downward trend, which gives us more confluence in this trade because it is with the trend. So this supply zone here, it removed a demand zone, which is fantastic. That's what we need, but also it created a higher time frame trend to the downside. So this move down created a daily trend to the downside. So that is a very powerful zone in my opinion. Any lower time frame zone, like a 4-hour zone, that could create a weekly downtrend or a daily downtrend is very, very strong. This is not something I'm always looking out for. It was just something where it's like, wow, that zone is very, very powerful, which is probably why it worked out as well. So just wanted to point that out as well. The multiple time frame analysis factor added in with the fact that we have a great zone. And look, as far as like the criteria for a zone, we have the basing. The basing, I would say, was poor. We have the move away, right? I would say that was great. And then we have our higher time frame confluence. I would say that was great. So we have bad basing, but the move away was great. The higher time frame charts are looking great. So it basically negates the fact that the basing was poor quality. So that's why it didn't really concern me all that much. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links are in the description down below. All right, now let's touch on trade management. How did I achieve a 5-to-1 take profit? Because I will tell you guys right now, my stop loss was here when the trade was triggered, but it was certainly not up here as price was hitting my 5-to-1 take profit order. So that's why trade management is important. It's very difficult especially for new traders, to have a stop loss up here, let this entire trade play out without moving your stop loss at least to break even, right? So like I said, a stop loss at break even right here, if you would have moved your stop loss at break even, you would have been stopped out at break even. And this, usually I will do that in this situation here, but like I was saying, my higher time frame analysis indicated we could see a bigger move, so that's why I did not move my stop loss at break even. I wanted to give this some wiggle room and test these lows here. That is why I left my stop loss up here and not putting it at break even, because typically I would have been stopped out at that trade. So how did I manage my position here? Let me show you guys here. So we have a red line here, and this is going to indicate the stop loss order that I had. So I'm going to put it right in the middle here. So this is my stop loss right here. You know what? I'm just going to get rid of the text. That's not helping. So this is my stop loss here. So my stop loss was here. If I go to my risk reward tool again, this is what my trade looked like. I don't know the exact prices. It doesn't matter. I just basically enter right a little bit right before the zone and right above the zone for my stop loss, and my take profit was 5-to-1 over here. Now I'm going to clone this over here. I'm going to put this down here as my take profit, and I'll put it blue for all of you MT4 traders. So this indicates or represents my take profit order that I had. So my entry, stop loss, take profit. So the trade play out, obviously we were filled and it wasn't looking great, right? We pushed, I would say over 50% into the zone. And when that happens, it doesn't really scare me. A lot of beginner traders saying, oh, Kevin, is it going to hold? I don't know. It could break. If it does, whatever. We are stoic traders here on my channel. We don't worry about that, right? I've seen price pull up, almost hit stop loss, almost break the zone, then boom, hit your take profit. I've seen that. I've seen price blow right through zones. I've seen so many things. This didn't scare me at all, especially when we started to move back out again. I was feeling very confident in the setup. But like I said, I didn't move my stop to break even because of the fact that I thought we could at least target these lows based on the fact that the daily trend was down now based off of this supply zone. So I wanted to give it a little bit more wiggle room. So when price pulled back in, I didn't love it. Honestly, when price pulled back in, I'm like, wow, maybe this trade was wrong. Probably going to be a losing trade. And the reason is because we tested the zone a lot. If we zoom in here, you can see it's not like the zone was fresh over here. Price pull came in, just wicked it like that, and then came out, right? We spent a lot when price does this, where it comes in, just wicks the zone, and then comes back out. You can trade a second touch here. I don't trade at tested zones at all, so I wouldn't be trading here. Me personally, that's just one of my trading rules. You can trade there. It's just lower odds. But when price barely wicks a zone, that's when you can trade a tested zone. Here is when I wouldn't. So I would not be taking a second entry here at all. And here is why. Because we came in, let me zoom in so we can really see the details of the candle here. So we came in, touched the zone twice, 3, 4, 5, 6, 7 zones spent here at the pretty much right at the proximal line, 25% of the way in. But then look at this too. This is what I didn't like. We spiked over 50%. I'd say maybe 55% of the way into the zone. That is what I did not like. So that's why I would not be trading that second test. That's also why when we came in for the second test, I'm like, wow, it's a very, very tested area. It's probably going to break. But obviously, price started to trend down again on the lower time frames, and then once we targeted this low, once we broke this low, I thought, all signs are pointing to the downside here. I'm pretty sure my 5-to-1 take profit is going to be hit like no problem. So basically, how I managed this trade, when price broke this low here, I'm going to change the color of that. That's fine. So when price broke that low there, I'm like, things are looking really, really strong as far as weak to the downside. And then this is the other low I was watching. So when we got this massive red candle down, I forget what time this was at. Yeah, so it was like 1 in the afternoon, massive red candle down. I then moved my stop loss to break even. I still wanted to give it a little bit of wiggle room, but I didn't mind if price came back from here all the way up and take me out of break even. That's fine. The risk to reward at that time, it was good, but not great. Not going to recover me from that drawdown, right? It would be helpful, almost 2 to 1, almost 3 to 1. Could have been fine, but I still wanted to give it some wiggle room. So that's where my stop loss was. And then we broke this low, and then not only do we break the low, but if you look, it looks like some sort of base drop. If you look, there is some sort of supply looking zone right here, and then also a supply looking zone right here. Why do these look like zones? Well, because we have basing and the move away. That's the two parts of a zone, the basing and the move away. Looking really, really strong. So these were great areas to take your stop loss, bump them above for protection, right? Because price could have did this, pull back up and continue to drop. Then you can continue to move your stop loss down. So that's what I realized. I didn't draw them as zones. I didn't have them as zones, but they were great areas for me. So basically my trade management was my stop was at break even, kept going down. We broke the low, boom. And then once, this supply zone was really good. So once we started to get, somewhat close, remember my take profit order was right here. Once we kind of started to base out here, I'm like, oh, I hope this doesn't turn around. And I basically moved my stop loss to break even. Or sorry, break even right here above this little supply as protection, like I said, right? Because we could easily get a move up, react off the supply. My stop loss is well protected. And if, let's say, price came up and stopped me out, that's fine. Price hit my stop loss, but my stop loss was in the profit, right? So if you take your risk to reward, what I did there is I essentially locked in a 2-to-1 trade. So at that point, I'm letting my trade hopefully go to my 5-to-1 take profit so I can make an extra 3%, but I locked in 2%, and that's fantastic. That's part of risk management and trading. It's a phenomenal tool. I know so many people who that whole GameStop thing, and they don't know how to trade, they don't know how to invest on their own, but the whole GameStop thing, they open a broker account, bought GameStop, they're up. I know a guy who was up 90 grand. He did not take any profit off. And if only he just knew that he could just put a stop loss order in place and lock in profit or sell half, whatever. There's so many things you could do here. You could sell half here and put your stop loss here and you lock in even more. But anyways, that is what I did, and luckily things went smoothly and it just hit my take profit anyways. Again, even if it pulled up, whatever. Stop loss is well protected, locked in a 2-to-1, big deal. This worked out great. It doesn't always work out like this. I've had it where my stop loss was break even, price is like 3-to-1, boom, stopped me out at break even, lost that 3%, or didn't lose, but I lost those gains. I've had it where price comes up, protects the zone, then gets stopped out. Right, I've had that happen before too. This one just happened to work out beautifully. Yes, we did stutter here a bit, but as soon as we pretty much broke this low, all signs are going to the downside. And I love that we are getting little mini supply zones on the way down for stop loss protection. So that was my trade management. That is how I manage my, it's managing your emotions too, right? You know how painful this would be if, let's just say you're 5-to-1, let's just say you had a wider stop loss up here, which you can do. So then your 5-to-1 take profit, okay, that's still not wide enough. Let's just say it was like something like this. So like your 5-to-1 take profit was like right here. Let's just do that. 5-to-1's right there. And then price barely misses you here. You're almost at take profit, and then price goes boom, stops you at a break even or for a loss. You can't, that will destroy your emotions. I've been trading for 5 years. There's no time for that. It's very, very difficult to be trading, and that happened. So that destroys your emotions. But this was the trade review on USDCAD, guys. Again, I cannot emphasize enough. Having a good risk reward can make up for a significant drawdown that you are having. And just because the Trump tariffs thing's going on doesn't mean that you should be blowing trading accounts. Going through a drawdown like I did, completely reasonable. Blowing accounts, absolutely not. That's why you need to continue to trade the way you do, like we do at this 4-hour supply zone. And one trade, I made up for that bad week of trading, that 5% drawdown in just one trade. That is one of the keys to success. That is why trading supply and demand zones combined with a good risk reward is one of the most powerful trading systems there is out there. If you guys want more help with your trading, check out the Diamond membership. We do daily market breakdown videos. Supply and demand course PDF is also available. Weekly Forex forecast every single Saturday. With that being said, guys, I will see you in the next video. Make sure to check out my trading tips playlist as well.